Everyone thought buying a presale in Vancouver was guaranteed money, but what if I tell you that those same presale buyers are now facing losses anywhere from $400,000 to well over $1 million? In this video, I'm going to break down a specific building with real numbers from the MLS, showing you how one of these buildings is just getting crushed and the buyers are paying the consequences for these purchases from a couple years ago. We're seeing this across the board. We know that the presale market is in trouble. We know that people that have bought presale in the last couple years are also been in trouble. So we're going to detail how these deals were structured, what went wrong, and more importantly, how is the resale market showing the cracks in these purchases. If you're a buyer, this is your warning, and if you're a savvy seller, there is some opportunity here, especially in condos that are around that 1 year to 5 year old mark, that you can get some great value if you know what you're looking for. I'm going to show you the risks associated to presale construction that no one is talking about, what's happening in the resale market post-completion, and why some buyers are stuck and are having to make some hard financial decisions by selling their properties at a loss. And finally, how savvy sellers can really take advantage of these conditions right now here in Vancouver. My name is Kyle Mark, your Vancouver Realtor, and whether you're looking to buy, sell, invest, or relocate to my beautiful city, Vancouver, make sure you book a discovery call with me. It's in the description below. Also, I have my free home buyer's blueprint, home seller's blueprint that you can just click and download for free in the description as well. So let's get into this presale meltdown here in Vancouver. As I bring up the MLS data here on the screen, we're going to be jumping into 889 Pacific Street. This is a building that's built by Grosvenor, a very reputable builder, completed in 2001, but it has been a project that has been flagged with a bunch of fire sales, buyers that have been in financial trouble, having to make hard financial decisions. And when you start having a precedent with these fire sales in a building, it just shows to you the risk of a presale. So many people got into presales when interest rates were very low. People expected these sub 2% or low 2% rates to last forever. And they just got a lot of bad advice. I think in the presale market, that's where a lot of agents get their start. There's not a lot of experience, a lot of time served in the real estate market. People saw what was going on in the early 2010s, mid 2010s, where people were making so much money, hundreds and hundreds of thousands of dollars. There was no regulation. You didn't have to pay back any profits back to the developer. But that has since been regulated. And when you are, working with someone who's not as experienced and doesn't have the longevity in the marketplace, they don't have the foresight to see all the risk. And when people partner with agents that are newer, that don't have that experience, this is where things get very problematic. You buy in these pre-sales that are years and years before completion, you sign a legally binding contract, and now you have to complete on that unit no matter what happens in the global markets. And we know that for people who have bought these pre-sale units back in the late 2018, 19, 20, and there's just been so much change. We had COVID, we've had inflation, we've had super high interest rates. So when you complete on a project or you sign off on your pre-sale contract and rates now are double or triple than what they were when you made that initial offering to the developer, things change big time. And when it completes, buyers who are leveraged have a lot of hard decisions to make. So you can see that right here. And I'm just showing you, this is just since the end of 2023, the sales in this building. And what you're going to see right off the bat is just a lot of red. These are all units that have sold under ask. There's a couple greens here that sold for over ask, but I'm going to show you the story doesn't really meet the eye on that. And the other thing you're going to notice here, a lot of these buildings here, the days on market don't seem super long, but most of these projects here have been on market for 3-4 years, and they've had to relist them several times, and that is why these days on market are low. I mean, it shows that the average days on market is 55, but if I bring up some of these here that have sold, you're going to see just how long they have been on market for. So I'll bring up a history on one of these here. You can see this one was on market since October 2021, finally sold December of 2023. And what you'll notice on a lot of these ones, as we look at these tax assessments, assessed at 1.92, ended up selling at 1.499. All right, so over $400,000 under assessment. And this is where things get very problematic, because once you start having some of these fire sales in the building here, there's a precedent and people understand that precedent. And this is what I'm going to show you here, because I did have a listing in this building. And when I do have listings, this is a Google sheet that I have that tracks everything. So we know exactly what's going on in the marketplace. And what I want to show you here, these last 4 units here, as I highlight them, These are all in this specific building. And what I want you to notice, if I remove these four, you can see the average prices assessment right now is 91%. If I delete these to show you what's truly happening in the marketplace of these units comparable that are about 4 to 5 years old and are in more luxury builds of the same size, the same age, the average price of assessment of these solds, not the actives, which is up here, is 96.72%, which is very, very strong. But if we put these numbers in of these last four sales in that building at this time, 91% it drops to on the average. But then if I take out the rest of these, this building is selling at 80% of assessment. And you can see that there's one here, the unit 606, that was a little bit higher. And if I take this one out, because this one was actually sold in 2023, if we use the most recent data, the average is about 78% of assessment, when the rest of the market is sitting at a number of 96%. So you're almost at a 20% drop in terms of pricing in this one specific building. And we're seeing this around Vancouver as a whole. Anyone who bought into these luxury builds and they had completions around 21, 22, 23, a lot of people have gotten into trouble. They leverage themselves. They already owned, in most cases, a lot of these people already owned a principal residence, used that equity to get into something else, and the market just didn't work out. And there's a lot of issues with this as well. I mean, if you have a property that's selling 20% less than what is going on market, the problem with that, especially if you're waiting for a unit to complete. So say you see an average sale price here of some of these newer builds dropping 20% under average, and you have an upcoming completion that's very soon, they're going to use a lot of these sales in the area for you to complete on. And if all of a sudden you need an appraisal done on your property for a pre-sale and you can't appraise out, and the bank starts to see this as a risk where there's a ton of value that's already dropped from when you originally purchased, you may not be able to get financing. You're going to may have to look at some private options where your interest rates are going to be that much higher. And if you can't complete, not only will you walk away from your deposit, you do have other serious consequences where a developer can come after you for damages and sue you if they can't sell the unit for as much as you purchase it for. So those are some of the things I want to highlight to you. There is a lot of risk for pre-sale purchases. I myself, I've done 4 of them personally. They've all worked out for the most part pretty well. But at the same time, I've done this for quite some time. This is my career, so I know what to look for. For the average person, I would say right now, I am not, my last pre-sale purchase, as a caveat that, was a couple years ago, but now I don't recommend anyone buying a pre-sale project unless you can really negotiate with a developer in terms of getting a really good price point and being able to negotiate on your percentages of your money down, because in often cases developers are wanting 20% down that you put on the purchase price to hold it, whereas when I was buying a lot of my pre-sales, you only had to put 5% down, so there's way less risk. Something else that a lot of people aren't talking about, there are some projects in downtown Vancouver where phase 1 was selling at a 50% higher clip than phase 2. So put yourself in those positions too. If some of these developers right now, they can't move these units, it's similar in the GTA in Toronto, that you had phase 1 of one building, I'm not going to name it, but it was selling around $3,000 a foot, sold that project out. They released phase 2 later on, obviously, with the scheduling, and they were having issues selling those units. So as they had issues selling those units but needed to move them, they started dropping the price, and some of them have dropped 50%. So could you imagine you bought into phase 1 and now you've lost 50% of the value of that project? That is another risk and another thing that can happen with these pre-sale projects, and it can be very, very problematic for you. So you need to really understand and align yourself with a realtor who has experience in these dynamics, because like I said, a lot of people who are new and get their start, and I was very similar with that as well, they push people towards those pre-sale projects because a lot of the time here in Vancouver, people can't afford right away to jump into the resale market. They can do away with a little deposit up front, wait the 2 or 3 years to try to work hard, get their income to rise so they can make that mortgage, get that deposit. But if things change and your unit doesn't appraise out, you lose value in it, or you can't complete, there are massive consequences. So if you have questions about the pre-sale market, you can book a discovery call with me in the description below. But like I said, right now I have a lot of resistance to going towards the pre-sale market right now. I think there's a lot of value, a lot more value in the resale market. Plus, for those who are buying brand new, there's 5% GST that you have to tack onto the price point as well. The federal government recently has increased the first-time home buyer incentive, where if you buy up to $1 million pre-con, you don't have to pay that GST. I know the conservatives want to raise that bar to 1.3 million, but if you're not a first-time home buyer and you're wanting to get into the pre-sale market, or the pricing is above those metrics, you have to add 5% on, and that adds to the risk as well, right? That's 5% more. And on the flip side, so a lot of these people here who are losing a ton of money on these projects, what the problem is here is not only are you losing out on the original purchase price, you paid the 5% GST, and then you're going to have realtor fees on there as well, anywhere from $30,000 to $50,000. So a lot of these units here in this specific building, a lot of these 2 bedrooms that are around 900 square feet, they were selling for around 1.4 million plus GST. They were almost at 1.5 million all in. So at 1.5, and if you are paying realtor fees on that, you're needing to get to about 1.55, maybe 1.6, depending on the price point of your unit. And look at a lot of these 2 bedrooms, what they were selling for. So as we bring these 2 beds up, you can see 1.3 million, 1 million, 1.48, 1.6. These ones are on much higher floors, so their price point would be a lot higher, but the entry mark for these were around that 1.4 mark. So you can see that there's some heavy losses. Like if I bring up this unit 3304, you're going to see, sold for 1.6, and on paper it looks good. They sold it, above ask. But when we bring up the tax history on this, 1.931. Right. So again, there's another one in this building where it's sold $400,000 under assessment. And this building has been quite common to sell anywhere from $300,000 to $500,000 under assessment. So if you're a resale buyer right now, identifying buildings like this that are having issues can be something that is very beneficial for you. You should be able to see some pretty great appreciation over the next couple years as you hold. And like I said, if you are a buyer, having a strategy like this is going to be a lot more beneficial, because if we take the same building here and just put in some what the actives are, you can see currently in the same building there's 8 units that are currently for sale. You can see that a couple of them have already had price reductions, and then if we look on days on market, and you can see that this building has been problematic. This one's almost been, these 2 units here have already been on market almost a year. This one's at 281 days. If we open this unit up here and see the true history, I bet it may even go, it goes back to 2022. So September 2022, they've been on market. So coming up to 2.5 years, they've been already on the marketplace here. And if we look at their tax assessment, 1.669. So not terrible, it's essentially on par. But like I said, because you've had so many sales here that have been so problematic, these units aren't moving, because buyers know that why would we be paying essentially assessed value when everything is selling hundreds of thousands under in this building. So that is what I have for you today, just so that you understand what the risks are associated to the presale market. The presale market is cooked right now in Vancouver, very similar to those numbers in the Greater Toronto area. So just be very careful if you are thinking about those presale markets. If you want to strategize the difference between a resale or a presale, like I said, book that discovery call with me. It is in the description below. Also download your free home buyer's blueprint. There's a link to that as well. That's going to walk you through the whole process. There's a lot of inside information when it comes to data, Canadian macro and microeconomic data, as well as the analytical numbers for the areas across Vancouver as well. So thank you so much. I'll see you on the next one.